welcome. You're watching Markets at Money Control. It's a Friday morning and we'll be discussing the overnight developments and the key trends to watch out for today. I'm Rakshita Madan. A look at the headlines first. US revises second quarter GDP growth up to 3.1%. Back home, government maintains borrowing target for the second half of FY18. And lastly, SBI cuts base rate by 5 basis points, follows Andhra Bank and Bank of Baroda. Time for the markets chat now. Joining me is Money Control editor Santosh Nair. Good morning, Santosh.
Good morning, Rakshita.
We saw a smart recovery in late trade yesterday. Can we expect the party to continue today?
Yesterday's pullback was largely attributed to covering up of short positions because of the FNO expiry. And what's taken the market slightly by surprise is that yesterday foreign funds pulled out a little over 5,300 odd crore, which is the single largest selling by foreign funds in a very long time. So that is a slight cause of worry. Of course, domestic inflows continues to be quite robust, and we saw more than 5,000 crore worth of net buying by domestic institutional investors according to the provisional figures on the stock exchange. So I think at this point the market is lacking triggers, mainly positive triggers that could really take it up. Last week's sell-off has kind of made players a little worry, and unless they see the market sustaining above 9,900, I think traders will be a little worry of going long on the market.
Right. And how are the global cues looking this morning?
So Asian markets pretty much mixed at this point. Not much of activity yesterday in the US markets either. So we can say that global markets right now are not a major factor. India has been one of the worst performing markets in the emerging market space during September, and that could perhaps continue for some more time given the weak macro picture. Now, the immediate trigger for the market that most investors are eyeing is RBI credit policy next week. But the general feeling is that the RBI is unlikely to cut rates given that inflation is still not under control.
Right. And looking at the technical charts, after 7 straight sessions of losses, we saw some gains and a bullish pattern. What should investors do?
So technical analysts feel that there's a bullish candle which is formed right now, but they would still wait till the market, till the index gives a breakout above 9,900. In the short term, clearly the key support level will be 9685. The positive sign is that the market managed to hold above the 100-day exponential moving average of 9710. Technical analysts feel that unless the Nifty is able to close above 9920, traders should rather try to pair their positions at every rise.
Santosh, what are the stocks to watch out for today?
So there's been a rejig in the Nifty, and that becomes effective from today. So the stocks that are going out of the Nifty today include ACC, Tata Power and Bank of Baroda, and the stocks which are included are Bajaj Finance for one. These are some of the stocks that could be in the limelight. Now, inclusion in Nifty means that these stocks will be on the radar of fund managers who are tracking the index, and at the same time the stocks which are out of the index could see some bit of selling pressure. You saw a fairly good amount of delivery based activity in some of the key tech names. HCL Tech and TCS still very much on the list. Also in Kajaria Ceramics, you've been seeing some bit of steady action there. It's been there in the most actively delivered stocks for the last few trading sessions. We saw long build-up of positions in Kotak Bank, NIIT, Nestle and Bharti Infratel, and some kind of short build-up in stocks like Bharat Forge, BHEL and Titan. You could see some bit of action in Bharti Airtel and Idea, both of which plan to move the court against the TRAI's order of cutting the interconnected user charges. So these are some of the stocks to keep an eye for today.
All right, Santosh, thanks for the insight. With that, it's a wrap on this edition of Markets at Money Control. For more news, views and updates, stay logged on to moneycontrol.com.